Welcome to Money Without Borders. Today, we're busting myths about passive income. Is it a scam, a fantasy, or a smart strategy? I believe you've got some great questions for us.
I keep seeing ads about passive income everywhere. First question I have is, are they scams? What's the difference between real passive income and those get-rich-quick schemes? And how do I know if an opportunity is really safe for me to engage in?
Hey, Cara.
Hi, Annette. I'm well. How are you today?
Not too bad. Welcome to Money Without Borders. Today, we're busting myths about passive income. Is it a scam, a fantasy, or a smart strategy? I believe you've got some great questions for us.
I keep seeing ads about passive income everywhere. First question I have is, are they scams? And then the second question I have is, what's the difference between real passive income and those get-rich-quick schemes? And how do I know if an opportunity is really safe for me to engage in?
And then this might highlight basically what you need to consider when you're looking at a passive income strategy. Now, first thing is you've already got this money and you've worked hard for it. So it has to be some sort of level of capital protection. Most investors, Cara, promise you, would rather get the money back flat after a period than lose $1. So must be capital protected. The second is passive income means it's structured. It's a structured income. So it's a carefully planned paycheck for your investments, offering basically steady, predictable return. And then, above all, you need to have it backed by contracts, whether it's online or whether it's physical, etc. You need some level of transparency and trustworthiness to know what's happening with your money and where it is. Above all, it needs to be tied to real assets. Now, real assets are things like property, loan notes. You need something that provides some sort of stability. Basically, people want to know how the returns are made for them to get the returns, the interest or whatever that they've been promised, and that their money is secure.
So really passive income is you get your money back now, right?
Yeah.
I invest, but I'm getting my money back in a short amount of time.
Correct. Yeah, capital secure. The money's coming in now, so you're not waiting for a promissory note. So unitized investments, you're buying something for $1 today in the hope that it goes up to $10, whatever, by the time you need it. History has shown that isn't always sustainable. So what this does is say, I'm going to put my $1 in today, my $1 safe, but on that $1, I'm going to get 50 cents.
More so about safety and me having the ability to predict more so than having a get-rich-quick scheme.
Yeah.
No overnight riches.
If you've got the ability to fix your mortgage rate when you borrow, you know what you're paying for the next 3 to 5 years, so you can plan around it. If things are going up and down like this, unless you've got lots of money above that to make arrangements, right? Well, I need to share this because the logical thing people do is say, well, hang on then, why don't I just go low risk? The problem with low risk is low return. You might as well put it in a box under your bed, okay, for all the effort. But if you want high returns, it generally, in traditional investments, is a higher risk. So it depends where you are. Whereas income, to highlight in simplicity, this is what you look at. They're different. They manage risk carefully to deliver steady returns over time, okay? Once your money is set up, it works quietly on your behalf and just fires an income through to you.
So it really provides a lot more security and a lot less hassle.
And part of the reason I went down this route with Carrie Soon is a lot of my investors, as I say, were at 2008, financial crisis, woke up, and what they had yesterday was half the value the day after. I woke up thinking, if that happens again, and there's always a potential, or even with COVID, it dropped 35%. If that happens again, I would be choked if it was my money. Some sort of security to ensure that I knew where my money was coming from. I'll give you an example of one of my very good clients. He's invested in this structure, and basically what happened, just bear with me, was he had about 1.5 million when he retired, and it was in what we call unitized investments. He bought funds, some stocks and shares, and the prices were basically flat by the time he went to retire. And we'd organized a drawdown of 5% from this money, because when we first started to invest, his money was growing 8 to 10% a year. So drawing down 5, he could afford to live off that. Plus, he had some capital left. But that stopped happening. So we looked at an alternative. So we moved 3/4 of it basically into the passive income strategies I've mentioned. So he's in various ones, not all locked in one basket. And that gives him $12,000 US a month income. He's still got $400,000 in his portfolio. Okay, if he ever wants to draw down more cash for, bigger holidays, because him and his wife worked really hard when they were working, and they hardly took, the annual family holiday, but it wasn't major. They've just gone crazy because the grandkids are all over the place. They travel business or first class everywhere now because they can afford to, because they don't have a mortgage anymore. The bills are quite low. All this is just pocket money, so they can choose the lifestyle. And he's very, very, very happy. And this is all secure. Even his stocks, nobody can guarantee your capital in stocks. You don't lose the units, but you need the value to increase for it to be worth anything. Today's structures, or traditional structures, are not working for a lot of people. It's hard to plan to get your income to retirement. This is an alternative way to consider, certainly with some of the money. And my clients are very happy that they did this.
And when you get to that point or that stage in your life, Annette, where you've worked so hard to build this up, and now you're enjoying the fruits of your labor, so to speak, and you're retiring, you need to have that peace of mind, right? That's what people want.
I've got a lot of clients who are still working in this structure to build for retirement. So what it's allowing us to do is compound in short periods, compound it, because you get the money, we reinvest that, you get the money, we reinvest that. So now some people have got to a point, they've got too much cash in the bank because we're rolling up too much income. Well, I'd rather deal with that problem for you and worry about that than what the value is. I went through the period of COVID, right? Everybody was super miserable anyway. And then 2019, COVID was really bad. The investment markets were really good. Same with 2020. And then they crashed in 2021, right? Asking me, well, where can I put my money now? And I'm like, I don't know, because it's so unpredictable and so volatile. And now you've got new players on the market. You've got other indices that are joining outside the big guys, okay? So it's going to get more volatile. So to me, and rather than paying great big chunks to fund advisors and fund fees, fix your income. As long as it's within what you need, you've just got that peace of mind, and your capital's protected.
I think that's beautiful. Something that we can control, because we can't control everything else that's going on in the world, but we can control this.
Correct.
Which I think is great. Yeah.
And how it goes in, you can control what you do with the money coming out, because it's in your hands. So I think it's a very different way. I mean, it just provides stability.
I was having a very interesting conversation with my mother today, and she kind of minds the market a little bit. And she was saying, boy, I don't know. I think I need to move some things over. She said, I predict a huge dip in the market in the next month. And she said, and I'm predicting that there's going to be a recession or a depression.
How can I put this? I can't predict this because the leader says not. However, the fundamentals of what are going on versus the results don't quite meet. But the similar thing, I've just mentioned COVID, 2019, 2020, markets are booming. You're like, hang on a minute, half the country, half the world, completely destable. So what's going on? And then 2021, we got the result. Something potential with this. What's happening with our money isn't necessarily, it's all about growth. So the question is America growing to show these returns? That's the question. Because
Exactly.
you need to see something, be able to provide results for you to get your returns. If it's not, then your returns are going to be the first one affected, the worst possible time. So all passive income does is create some stability and peace, a predictable income.
I love that. And I wish I knew a little more about passive income years ago, but I know about it now. And I think education is key.
I think, yeah, passive income, people use the property cycle as a passive income previously. You had all these little buy-to-lets. Fine.
Right.
But I don't know about America, but UK, it's not a feasible scenario anymore because you're going to get taxed a lot on all your additional assets because the UK keeps taxing things, right? So your wealth will decline net value because of the levies that are put on. I mean, basically, guys, if you're curious, because we're talking about all sorts of different ways that you can levy your own cash, right, to get these returns. But if you're really interested in how passive income could work for you, book a free meeting in the link below. All right, don't forget to like, subscribe, and share. And we'd be happy to have a free consultation, sit down, discuss where you're up to, what you're concerned about, what you'd like to see, and we'll see if we can fit some gaps in for you.
That sounds great. I think you definitely simplified today, at least for me, what passive income is, how to go about it.
Yeah,
I'm really excited.
Yeah, but it's basically capital protected structure with a predictable return. But you need to know how your capital is protected and how the returns are made.
I think that's beautiful.
Yeah.
Well, Annette, in our next episode, we're going to dive a little more into why women and maybe groups that have been marginalized, such as African American, the Asian community, LGBTQ, why these investors often get the short end of the stick and how to avoid those traps.
True. I mean, this will be a big discussion. I mean, the industry, very briefly, was created when society was working mums at home looking after the family.
Gender roles.
Right?
Mm-hmm.
So, and LGBTQ was illegal in most of the parts of the world, remember? Right? So that never dawned on anybody at all. But now society's changed. But unfortunately, some of the rules and regs have not. I'll give you an example. You and I, if we were married, then we could go to Hong Kong as a married couple. Okay? But if you die or I die and we've got a house in your name or my name and you haven't written a will, it goes by the traditional man and wife rules. So we would be ignored when we die. So LGBTQ need a will. Hong Kong, I've had many an inquiry where the spouse, I get an email saying, my spouse died and the family's taking the house. I'm like, no, they can't. And then you look at the names and go, oh, wait a minute, John and Jason, did you write a will? No, well, the family can take the house.
Interesting.
You need to check. I'm not saying you have to go into mad details and research. A lot of rules are not up to date. It's only the surface that's up to date. The letter are marriage, but it doesn't mean to say that they actually acknowledge it legally, especially when
Right. That's interesting. So I guess that would hold true for like common law. A lot of countries still acknowledge the common law marriages as well, even with different sex.
Correct.
Couples.
And what you have to be careful, I'll give you some funny example in Canada, right? You might not want to be common law, but somebody's been bunking with you for 6 months or more, they might make them common law. And then you have to write instructions to make sure they're not in the scenario. So we have to pay attention because all these rules that are changing around the world, and hopefully for the better, they come with their own little traps because they haven't changed the underlying rules. So if somebody's not there, it causes a big problem.
So do your research.
Talk to me.
Right. Yes. And come talk to Annette. Absolutely.
Yeah, come talk
Absolutely.
to me message. Happy to answer questions, guys. Put them in the comments or send us an email or fire up a meeting. We're just happy to help because it is changing. The industry's changing. We need to look more short term and more guaranteed.
Well, thank you so much for sharing your knowledge about passive income. I think, there's so many people that want to invest, but really aren't educated about it, don't know how to go about it, don't know this terminology. And so the more that you educate and people feel more comfortable, the more that they're going to want to invest. So I think that's great. And I think everybody needs to invest for the future. Generational wealth, your own stability.
You can't leave your money in the bank either.
Right.
Where are you going to put it?
Your grandmother used to keep her money underneath the bed mattress. My grandmother used to keep money in mattresses and stacks of books. And when she passed, we had to go through, she had books everywhere. We went through books. There were money in stuck in between the pages of the books.
No way.
Because she knew that by putting it in the bank, she wasn't going to get that much interest off it. So she would hide it in books.
My grandmother
all through her house.
Post office.
Okay.
She was quite annoyed at the bank because when she passed, oh God rest her soul, she was lovely, my grand. She was 84, and just as she got to her 80s, the bank gave her a credit card. Well, she didn't understand what a credit card was. And then, of course, when you die, your debts are not ignored, right? It comes out of the money that you leave the family. So my uncle had to deal with all this dross anyway. So the generation, the harder it is for them to change to. Let's talk next week about women and minority groups, including LGBT.
I have a little corny joke for you.
Go for it. I'll go.
So just wanted to leave you with a smile. So why did the investor break up with her savings account?
I think it's because the interest rate just wasn't showing any growth in the relationship.
You're absolutely right.
We'll see you next week.
Yeah, thanks, Annette.
All right. See you soon.